Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, the next step in the market phase is housing. Is it going to drop? We're going to talk about that in this episode. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Bob, we are enjoying a nice day today in the markets. Everything's mooning up. And the blow-off scenario we've been talking about seems to be happening. Now, that's the stock market and risk-on assets. But we're going to segue over to housing here. And it's looking like we might be starting to get that topping action in the market. What say you?
Yeah, so there's a number of markets that are, you could call canary in the coal mine for speculation. And, the two that I always look at is Phoenix area and Las Vegas. But because of COVID and because of work from home, you had other areas of the country that got a lot of attention. Up in the Intermountain Northwest, the Boise area, Coeur d'Alene area, and then you had Nashville, Tennessee, and you had anywhere in Florida. And so now we're starting to see a spreading out of the price cuts, Phil. And we have a chart here. I want to show you the 10 that are experiencing the biggest price cuts. I'm not going to read it to you guys. I'll pause here for a second. You can pause the video if you want to look at these yourself. Okay. But these are the usual suspects, and it's really starting to expand. So I said, I was interested. I said, okay, if these are the top 10, is there a way to see across the country where the price cuts are happening? And I want to throw the second chart out at you, Phil. And this is the heat map of the United States. And this is relative value of price cuts, not absolute. So it's saying, where are the biggest price cuts as a percentage of the initial offer? Who's trending the highest, who's staying closest to the initial price. And as you can see here, that map is getting fairly red, and it's where you would expect. It's pretty much the entire Sun Belt, the South, the Tennessee area, and you have the usual suspects out in California and Arizona and Las Vegas, Phil. And what it's telling me is that these were probably, if I could find more data, I bet if I overlay a chart of highest rent to ownership in across the country, I bet the overlay correlation would be pretty high. And I bet the Airbnb concentration would be pretty high too. I mean, look at this market, Austin speculation, Florida speculation, Nashville speculation, and you have, Vegas and Phoenix speculation. And if you notice where people live that are moving, the price cuts are lower because people don't have to sell, Phil, right? Look at the upper Midwest, look at the Great Lakes area. That's probably more organic selling. And people are like saying, hey, I don't have to move right now, but I'm going to throw it out there and I'm going to hold on to the price. The other thing too, Phil, is they probably didn't get price appreciation either. So people are reluctant to sell their home at a loss. But these apartments, these condos, whatever purchased for Airbnb units, people, some of these guys have 30, 50 units and they could easily go bankrupt. So I think you're starting to see some selling in that area. I think this is just a start. Phil, we saw this in 2006, 2007, and then the dam broke in 2008.
Yeah, it's starting, right? So not everybody's going to see it. You're going to have areas and metros where you're just like, I don't see, problem with the housing market. Real estate's still strong, and that's true. I mean, like places like Southern California will be the last to really see any detrimental price action or price cuts. But, a year ago, you wouldn't have had anything in the blue shady that we see here. Like, you just wouldn't have seen it. Now you're starting to see the cuts come in. And I think, like you said, I think it's probably going to be concentrated in the more transitory or resort type destinations, Florida, Southern California, Gulf Coast stuff, Atlantic Coast stuff, the Carolinas and things like that. I think you'll start to see those destination areas that had a lot of Airbnbs. I think that's where you're going to start to see this stuff really ramp up. And I also think that you're going to see the Airbnb guys that were, had multiple Airbnb properties, right? Those were all contingent on positive cash flow. But we don't have positive cash flow at this point, and they're going to have to cut those things loose, right? If they're not cash flowing, they're not going to be able to carry those mortgages. And people are wondering, what's going to be the catalyst here? And because a lot of people have mortgages that are at the locked in lower rates, right? From below 3% even. And you're right, those guys have no incentive to move. But if your property, no matter what the rate is contingent on positive cash flow, you're going to have to cut it loose. You're just not going to be able to make the payment on that, even with a low mortgage rate. So I think that that's your catalyst is going to be investment properties. And we know there's a lot of properties that are, not primary residences. And those things are probably going to be what the catalyst is to cut loose the inventory. That's going to bring comps down as those things start to get cut. It's a domino effect. And then you'll finally kind of get that. And this is what you typically see in a housing cycle, and it's the race to the bottom in terms of cutting, because you're getting to the point now where your real estate agent's going to tell you, well, if you really want to move your property, you're going to have to undercut all these guys that are currently listed, right? And that's the phase I think we're going to start getting into, is people have to move property. So you're going to start to see an acceleration in price cuts now from here on out.
Yeah, and look, we're going to show some things this week is that you're starting to see a trending toward mass layoffs coming. So
right.
This goes hand in hand. It's going to be brutal, but we'll leave it on a positive note. We think the blow off is coming. I was telling people in the room, I said, these next 2 to 3 months, you better be making a year's worth of your percentage gains, because it's going to get pretty rough coming into the fall, going into next year. The really good news, Phil, is that there's some products coming out that we're definitely going to exploit that should kind of keep us market neutral and be able to generate yield. So stay tuned for that. If you want to trade with us, come to tradelikeagenius.com, and we have specials running, and we don't fear the bear, and we're going to enjoy the bull here. And it's going to be really, really interesting times, but I think we can make a lot of money here over the next 18 months by just keeping our eyes wide open.
Yeah, one other thing I'll leave the folks with is, you get a lot of times you get the question of how much will the market drop, right? How much will the real estate market drop? I would probably say that you need to reference the income to home price ratio, which is at like extreme levels. We've never seen the ratio as high as it is now. So housing is as unaffordable as it's ever been. But to get back to the median trend line of that would be looking at a 30 to 40% reduction. So I think that's the measure that you have to use, is getting back to that mean reversion on the income to home price ratio. And we'll show that chart in another video, but as that starts to come back down, then you'll kind of know that we're getting toward probably the bottom of the pullback in the housing market. And if you've been waiting, that's probably the time to go shopping.
Agreed. Anyway, guys, thanks. We'll catch you guys tomorrow. Have a great day.
Take care.
Trade Genius.